Hello, family. I am so excited that you've joined us today for this presentation. This is the beginning of a new year, and new year, what does that mean? For many people, it should mean a new home. And so today's theme is manifesting your next move. What questions do you have? What things do you need to get where you want to be? I've partnered with some of my favorite realtor friends, Flo and Annette, and we've reached out to one of our favorite lenders, and we put together a question and answer seminar to sort of prepare you for the process and just some questions that you can begin to ask about how you need to prepare to make that move. So without further ado, we're going to get started. Flo, if you can go ahead and jump to that next slide, because I want to just kind of get to know who's with us today and what your thoughts are. What is keeping you from purchasing a home? Go ahead and type it into the chat.
I received a private message that says credit.
Lack of knowledge. Fear of jumping out there financially. I'm paying for school out of pocket and I have a baby girl.
Wow.
Yeah, 16 months. Congratulations.
Congratulations.
I think that these are large factors in a lot of people's decision. I mean, lack of knowledge kind of summarizes everything, because I think that even with the credit situation or sort of fear, I think it's a fear of unknowns. I think that once yes, having credit history, understanding like everything that you need, I think you're going to definitely meet our objective, which is to make you feel sort of empowered, not sort of, but definitely empowered to even if you're not in the space where you can purchase immediately, we're going to give you the information so that you can get there. I'm just read these last few responses. You've always rented, but now you have vouchers, but you never had a lot of money and you're afraid of the maintenance. So let's see. What's our next question? Do we have time for another question?
Yep, I'll go ahead and go to the next slide.
So some people said that they're kind of feeling a little nervous because they don't have proper credit, maybe some income concerns, maybe you just started a new job. So the next question is, what qualifications do you think a lender looks for when pre-qualifying or pre-approving you to purchase a home? Just go ahead and type that into the chat too. Credit and good history as far as paying on time. Anything else? Credit's definitely a major component. Okay, length of your employment. Anything else? How long you've been employed, your debt to credit ratio, debt to income. What kind of job you have. That's interesting. So I think that what we're going to do is kind of clear up some maybe some misconceptions and clarify some things that it sounds like you guys are on the right track about, but maybe need some additional information on. If you can go to that next slide, Flo, because we have brought a special guest. I think that he's just the perfect person for what we're trying to do, a sense of empowerment. I know that every person that I refer to him, they're always really, really satisfied with what he's able to do. Carlo is a lender. And I asked him one time, we had a conversation, I was asking him like, well, what is your secret? Like, why do people like you so much? And he said, well, I think that it's because I'm willing to talk to people and work with them one-on-one to get to, to assess what they need and how I can help them. And I think that that pretty much sums it up in a nutshell, and that he's raring to go with providing you a ton of information for whatever your situation might be. So I'm not going to talk much longer. I'm going to just give him the stage to kind of address some of the things that we're talking about in the chat and any other questions that you might have.
Wanted to thank you for having me on. This is what we're going to be covering today: 3 key factors to buying a home, the magic credit score, how to raise your credit score without needing expensive credit repair, which is, I think, really exciting. The difference between what you qualify for and what you can afford, I think, is really important, because a lot of times when someone is getting a pre-approval, they get really excited about what they qualify for, but that may not be the best fit for them. So we're going to talk about that, the difference between a down payment and closing costs, and how to get up to $21,000 grant to buy your home. And the other thing, I'm also going to go over specifically the difference between the types of grants that we do versus what you may be hearing about out there. So I just want to share with you some success stories, some people that we have been able to help. So these are, we're doing these right now in this market, because there's a lot of misinformation out there. And sometimes what you might hear is, well, are you really able to do this in this market? Because you might be hearing it's a seller's market and the market's so hot. Yes, we can use the grant to help you even with the way the market is right now. So these are clients that we've helped very, very recently. And even this one right here, some of you even know Martika. We just helped her in 2022. So very, very excited about that. So
I know
we're talking
James
about,
too.
What's that?
I know James too.
Oh, yeah, of course you do. Yeah, absolutely. We work with him. We work with him together. But one of the things that's really important is because sometimes when you see success stories like this, you might be thinking to yourself, that's great, but when was that? Was it recently? Was it in this market? It absolutely was. And the other thing too is that they all started out just like you. They just started out because they were interested in buying a home. So that's what we want to talk about. So real quick, I know Tonette did a great job of introducing me. Thank you so much for that. I am a mortgage lender. 5-star rating on Google. I have to update this, by the way. I'm so grateful and blessed because I was on a mission to help 50 families last year. I was able to help 51. I'm actually on a mission to help 100 families this year. I like to play guitar. If you're friends with me on Facebook, like Tonette and Flo and Annette and Tamara, you know that I like to play some guitar, and it's a little too cold for roller coasters today, but when it's a little bit warmer out, that's what I love to do. So here's a question for you, and it kind of goes into what Tonette asked, and I loved how we started this and with the questions that she asked. But I would say, what is it you're most excited about when it comes to owning a home? Because sometimes we might think, well, we don't have the right job, we don't make enough money, and the debt to income ratio, and my credit isn't good, and all of these things that we don't even stop to dream about owning a home because those other things get in the way and it kind of stops us. So my question is for you, and please put it in the chat. What is it that you're most excited about when it comes to own a home? Because we're talking about manifesting things, right? Thinking about things and making them a reality. But if we're always stuck in the fear part of it, we don't really just dream like maybe some of our kids do, or maybe when we did when we were younger. So the question is, what are you most excited about when it comes to owning a home? Because I will tell you this, I'm super excited about helping you buy a home. Like, I really, really enjoy doing this. And I'm going to share with you throughout, the next 45 minutes or so, really what makes me different and how I enjoy working with people. So that's the thing. Dream. Think about it. Is it that you want to have your friends over? You want to have a spot for your kids that they can call their own. You want to just.
Can I read some of the son? Can I read some of the answers from?
Yeah, absolutely. Yeah.
You hit the nail on the head. That's what they said. No more wasting money on renting a backyard for the baby girl. Creating wealth.
Yes.
For the kids. And really empowering yourself through building wealth.
Absolutely. And thank you, Tonette. And please cut in anytime you want, because you know me, I can talk. So, and here's the thing. This is a mindset shift I want you to make right now, right here and right now. And if you want to write this down or you want to remember it, whatever it is, but here's the deal. If you are paying rent, you're already making a mortgage payment. It's just not yours. You're building wealth for someone else. And someone had mentioned about having to pay other things. And we're going to talk about the what if, right? Well, actually, you know what? Let's just get into it right now. Okay. A lot of people that don't own a home yet, and it's perfectly normal. It's natural. You might be thinking to yourself, well, what if I lose my job? What if this? What if that? And you start what ifing everything. But here's the thing. We have to be fair to ourselves. If you're going to what if that way, you also have to what if the other way. Well, what if my landlord decides to sell the house that I'm in? What if the landlord decides to raise my rent $300 to $400? What if the next time my lease is up, they require a credit check? Or it could be a whole slew of things. So I encourage you to be fair to yourself, right? If you're going to what if it on the other side of fear, you got to what if it on the other side of being a homeowner. Because the reason is because when you buy a home, you lock in the payment. You have more options. If something were to happen where you lost your job, because I've been through it and I've helped clients go through it. So you have to be fair to yourself. So a lot of times the fear that you might feel as not owning the home or being a renter, you just want to make sure that you're looking at both sides of it. What if you never own a home and you end up paying rent for 20 years, 30 years? How is that going to feel at the end of that? You have to be fair. So it's perfectly normal to what if all of the fear things, but you got to look at it both ways. Okay. And the other thing is, what is your why? And I think we already got to that: building wealth, having your own home for all the different reasons. The important thing is it doesn't matter. It just matters why it's important to you. That's it. Now, when I talk to clients, that are looking to buy a home, a lot of lenders, they just start with the rates and they start with the programs and this and that. I like to understand why you're excited about owning a home, because anybody can sit there and quote you a rate. Anybody can. And that's a huge disservice because rates change every single day. So the most important thing is why, because when things come up, your why is what's going to get you through. That's why I like the fact that we started with Eric Thomas, because he's amazing. His content is great. It's very inspiring. I've been listening to him for a while. I'm really glad we started there. And here's the deal. This is what it comes down to. If your why is strong enough, I can help you buy a home. Because at the end of the day, I'm not a yes or no lender. I'm a when and how lender, right? Tonette, she sent me a client about a week ago. The other lender said that they needed to 20% down. I'm like, well, maybe there might be a way to do this in another way. There might be a way to figure out a way to do this. I'm a how lender. If you want to buy a home and your why is strong enough, I'm going to figure out a way to help you. So if you might feel fear or you might be insecure about whatever it is, this is the no judgment zone here. I've seen it all. I've heard it all. I'm here to help. So that's the main thing with me, is I'll work with you until we can help you get qualified. I'll either get you pre-approved or I'll work with you until I do. So we'll keep going, because every fine agent on this call knows that I like to talk, right? So I could probably talk for 2 hours. My wife will not let me do that for today. So I want to get to it. And I also want to make sure that we can answer your questions. All right. So we will break each one down to 3 important factors of buying a home. Number 1, credit. We're going to talk about credit. Number 2, income. And number 3, down payment and closing costs. So if you had to think about the 3, credit, income, and down payment and closing costs, which one of the 3 do you think is the most important one? Tonette, if you wouldn't mind letting me know if we get any comments or anything like that. So credit, income, and down payment and closing costs, which one do you think is the most important one out of the 3? We'll just give it a second and then we can go.
Income.
There we go. Who said it?
Yep, income, another income.
There we go. Cool.
Incomes.
Awesome. Here's a reason why I say income's the most fantastic. If you said income, you are absolutely 100% correct, which is great. And even if you didn't, that's what you're here for, is to learn and to get that knowledge. Someone had mentioned, the knowledge. So that's what we're going to go over. And the reason why I say that is because credit, we can help you with your credit. The down payment, if you don't exactly have all the money that you need, we can help you with that too. The one thing that's kind of difficult to do is the income piece of it. We're going to get to that, but there's also some things we can do with that too. So anyway, know what your credit score is. I would encourage you to just start with understanding where your credit score is. Now, you might be thinking, well, listen, I heard that if I go and I look at Credit Karma, that's not the real credit score that the lender looks at, and you would be correct. But here's the thing, at least know where you're starting from, no matter where it is, because I believe anyway, that if you know where you're starting from, no matter where it is, it's empowering, because you then can figure out where you want to go. Because think of it this way. If somebody said, hey, listen, I want to go to the beach, or I want to go to, I don't know, Chicago, Las Vegas, wherever it is, how do I get there? The very first thing that someone's going to ask you, well, where are you now? Because without knowing where you are now, you don't know how to go from where you are from where you are to where you want to go. So I encourage you, I empower you, don't worry about it. Whatever it is, life happens and you can bounce back. Remember your why. What is your score and why do you think it is where it is? Right? That's very, very important, because if your score is where it is, why do you think it's where it is? Oh, well, I have some collections, I've got some judgments, I got some this, I've got some that. Maybe your credit's perfect and that's cool too, or it's good and that's fine. But think about where it is right now. The magic credit score is a 640 score. If we can help you get to a 640 score, it's going to open up more possibilities. Now you might be saying, well, wait a minute, Carla, let's back up here. I just went online and I found this lender that can get my credit score. They can do a loan at 580, 590, 600. Here's the thing. So can I. But the point is that those loans come at a steep price. There are adjustments to those types of loans. So what I like to do is I like to ask a better question. Well, rather than what's the lowest credit score you can qualify for, the question I like to ask is, well, how quickly can I get your score up so that you qualify for a better loan? So a lot of agents, when they reach out to me, they're like, what's the lowest credit score? What's the lowest credit score? That's cool, that's fine. But what I like to ask is, well, why is your client's credit score where it is? Is there something that we might be able to do to help them? So that's another difference of how I try to look at things. The 5 credit score factors listed below. We're going to go through these quickly, but if you have any questions, let me know. 35% is your payment history, how you're making your monthly payments. And if you've been late on your payments, then that's okay. Time heals all wounds. So if you've been late on payments, then that's okay. Just try to, moving forward, make those payments on time. And if you hear about credit repair, credit restoration companies are like, hey, we can remove this, we can remove that. I have found they are very difficult to do if they were legitimate lates. If they were legitimate lates and they were recent, what I would encourage you to do is to spend your time and your energy on other things, which we'll get to in a minute. 30% credit utilization. And basically what that means is how much you owe versus what the limits are. This is the fastest way to get your credit score up, is credit utilization. So basically what it means, I even like to do 25%. But if you have $400, a limit of $400, and you really want to try not to owe more than $100. So if some of you are getting your tax returns and things like that, you want to think about credit utilization. This is how I've been able to help clients get their credit scores up 100 points, 120 points in record time, and is credit utilization. I'm also going to share with you another way that you can do it in a second here. So if I blow past it, just remind me, but I'm going to share something else with you. Length of history. Length of history. How long have you had the account open? If you pay off a credit card, don't close it. Don't close it, especially if you've had that credit card for a long period of time and you've been making, and it's paid on time and you've had it for a while. You don't want to close it. Some clients I talk to, they've had credit for a really, really long time. Here is the fastest way. I'm helping a client close on his home. This is a young person, 20, I think he's 21 years old, 20 or 21. Agent sent him to me. He had no credit score. No credit score, 0. Well, within a month, I got him a 720 credit score. Here's what we did. Would you guys like to know how to do that? How to build your credit really, really fast? I'm going to just assume you're going to say yes. So I'm just going to go over it. So what we did was, I said, who do you bank with? He's like, I bank with, I think it was Bank of America or something like, it was a bank like that. I said, you're going to go and you're going to let them know that you want a credit card. You bank with them, your payroll checks go in there. You're going to bank with them. You got a credit card. Then what I said was, go have your mom or dad add you as an authorized user on their card. Now you might be thinking, who in their right mind is going to add me as an authorized user and let me use their credit card? You can say, look, just add me as an authorized user. I don't even need the credit card. But that's the fastest way because now their credit history is your credit history. And that is how you can go from 0 credit to having a credit score. Now, are there other ways to do it? Absolutely. If you're like, hey, I don't have someone to help me with that, there's other ways that I could do it. So it's outside of the scope of this, of our webinar this morning, but there are other ways to do it. New credit, that's 10%, okay? And then a credit mix. What a credit mix is you have a car loan, student loans, and revolving like a credit card. Because a credit card is where it fluctuates depending on how much you owe, where a car payment is the same amount. It's an installment loan. So credit mix, not as important, but important. So those are all of the different factors about the credit, all right? And what I'll do is if you have any questions, like I said, just write them down. I promise you I will answer them before I go. So if you've got any questions at all, just let me know. We'll do a Q&A. Income. Some people commented on income. This is really, really good. This is the most important thing when it comes to purchasing a home is the income. So the very first thing is, what is your monthly income? First thing is that we go off the gross, not the net. So sometimes I have people that are filling out the application and they put in the net because they're just like, well, you can't pay for a mortgage payment with the gross. And that would be very true. But to qualify, you can use the gross income. So the first question is, what is your monthly income? How are you paid? Are you paid hourly or are you paid salary? Very, very different how a lender looks at that. Because if you're paid hourly and your hours are all over the place, you're working 40 hours and 35, then 20, and like it's all over the place. We're going to want to see some type of because we have to base the income and what you typically work. And if it's all over the place, what I suggest that you do is if you're looking to buy a home, try to work the same amount of hours for the next month or however long it is that you're planning to buy a home. I'm doing a loan right now for an electrician. And I told him, I'm like, Brad, I love you. You got to work 40 hours for me for the next month, for the next 2 pay periods. So that way it shows some stability. And he's only been on the job 6 months. So guess what? I'm like, hey, just work 40 hours a week. Boom, we got him approved. That's another little thing that we do where someone else might look at it and just be like, this is all over the place. How do we calculate it? Salary. If you've been in school and you go and get a salary position, you don't need any job history. So again, there's a lot of misconceptions out there about how long you need to be on the job and all of that. If you've been in school, no job history. If you have a salary, that's even easier because it's a set amount that you're going to get. The only thing that is difficult is when you started working and then there's a job gap of more than 6 months to a year and you can't explain why. But at the end of the day, if there's a reason why, if you were in school or you're staying home with the kids or whatever it is, whatever that reason is, we just want to help you to document it and explain why you may have been out of work. Now, obviously with the pandemic, there was a lot of people that were out of work and it was totally legit, or there might've been a job gap. The other thing is how many positions have you had? So if someone has more than 3 different jobs within a 6-month period, a lender is going to look at that and just be like, that's not much job stability. So to a lender, it doesn't matter what type of job you have or how much you make or don't make. It's all about, does it make sense? And it's all about the ratios. So just think about that. It doesn't matter necessarily what you do. Now, if you're employed versus self-employed, we'll get to that in a second. How long have you had that stream of income? How long have you had that stream of income? Think about it yourself. If you were going to lend somebody money, what type of questions would you want to know? Aside from the fact, are they trustworthy? Do you feel like you're getting, but as far as their income, what are the types of questions you want to know? How much are you getting paid right now? How long have you been doing that? How are you getting paid? Those are the types of questions that you would want to ask. Now, here's the thing. My job is to figure out, what did I say a couple minutes ago? How to make it happen. I'm in the business of figuring out how to make it happen. So if you come to me and you're like, hey, look, this is the situation, this is what's going on. My goal is to try to sit down. Okay, well, let's see if we can do that. Before we started this, we were talking with the agents on the call, and I was explaining how they can make some self-employment income work very, very creatively. So anyway, we'll keep moving forward. How much you can afford versus how much you qualify for. Here's a real, just rough estimate. And you can take a screenshot of this if you want, but you're going to calculate your gross monthly income. You're going to multiply your income by 4.3. You're going to subtract all your monthly debts, but not including your BGE, cell phone bill. It's any debt that's on your credit report: student loans, car payments, credit cards, personal loans. So calculate your monthly income, multiply your income by 0.43, subtract all your debts, and typically whatever is left over is going to be where that monthly payment should be for your house. Okay. And then I'm going to give you one little bonus thing that I normally don't go over. But then let's just say that your housing expense after all of that is $1,200. Okay. Then what you do is to figure out what that might be able to get you. It's basically on average $7 per thousand. $7 per thousand on average, as long as it's not a condominium with crazy HOA fees. But that'll empower you to kind of get an idea, like, this is kind of where I need to be. Now, here's the thing. Some lenders might say, hey, listen, you know what? I can get you approved at 0.55, 55% of your income. Well, that's true. I can do that too. But that's where the difference comes in between how much you can afford versus what you qualify for. And sometimes when you're talking to different lenders, they're gonna be like, well, this lender qualified me for 200. This lender over here qualified me for 250. This lender over here qualified me for 300. That number is irrelevant. That number is irrelevant. When people call me and they tell me that lenders qualified them for different amounts, that number is irrelevant if it's not a number that you can afford. That's a huge difference, because it's almost like a badge of honor, like, you know, an ego thing. It's like, well, I qualify. If you want to know like the absolute max, how fast the car can go, I'll tell you how fast your car can go. Maybe it's 200 miles an hour. Maybe it's, you know, 100, but you still may not want to drive that fast because you don't want to crash. And that's the thing that's a big difference between how some lenders work versus, you know, how I do things. And I believe that it's not fair for me to ever say, and you'll never hear me say this in any content or anything, I never tell somebody how I'm better. I don't know if I'm better than somebody else, but I do like to share how I'm different. And I hope that you can see, if you're talking to anyone, that I do like to approach it a little differently. All right, so down payment versus closing costs. So a down payment is the money you're required to put down when you buy a home, right? It's typically between 3 and 3.5% of the purchase price. All right. And you might be thinking, well, wait a minute, I thought there was down payment assistance. Like, why do I need that money? We're going to go over that in a second. I'm going to show you where you can get that money, but it's still required. It's just that there's creative ways that you can come up with it. So if you're looking at a $250,000 home, 3.5%, your down payment, you're going to need about $8,700, $8,750. All right. Then there are closing costs, right? So typically closing costs are about 4% of the purchase price. So $10,000 typically. If we look at that, you're looking at $18,750 that you would need in order to get into a home. And if you don't have it, it's okay. That's why you're on this call, because I show you creative ways and different ways that you can get that money. But I just want to make sure that you understand the difference between down payment and closing costs. They're two very different things. A down payment is the amount of money that a lender requires that you put into the deal of your own money. And then the closing costs cover everything else. The closing costs cover the title fees, the lender fees, setting up taxes and insurance and all of that fun stuff. The recording fees, which, by the way, as a first-time homeowner in Maryland, the recording fees are waived. You don't pay those. That's the difference between the two. And I just want to go over that because I do get that question sometimes. So down payment versus closing costs. A down payment is the money you are required to put down when you buy a home, typically 3 to 3.5% of the purchase price. Okay. Veterans, for example, if you're a veteran, you qualify for 100% financing. You don't need a down payment. Veterans don't need a down payment. There's certain houses that are zoned in USDA, which are rural areas. And USDA, if you're not you're not set on where you have to live, and you're like, hey, I'm open to where I live. Right now, my job lets me work remote. I don't need to be in a certain particular spot. I know many of you do because you have kids and schools and things like that. You have to factor that in. But for some people, they may be open to to living in a USDA zone. And that's basically like a rural area. You don't need any down payment for that as well. So veterans don't need a down payment. USDA do not need a down payment. But you might think to yourself, hey, I'm not a veteran and I do know where I want to live because I want to be around my family and my friends, and my kids have school and they have, we're already part of the community and we go to church and all of those really important things. We do know where we want to be. So then the next part is going to be for you. Because if you want to buy a home and you may not have the entire money that you need, you can get a grant up to $21,000 to buy your next home. So before I get to the final piece, I just want to say that not all grants are the same. Not all grants are the same. So some grants come with restrictions, which means that some of them need to be paid back. Some of them become second liens on your property. And to just explain that very simply, when you go to buy a house, the bank or the lender is going to put a note on that house, which basically says, hey, look, if for some reason the payments aren't made, well, we're securing it with the property itself. So some grants, what they do is they put their name on the title. What's that? Okay. Was there a question or just background?
Huh?
Oh, I thought it was a question.
I think that was background noise.
Okay, gotcha. Okay, cool. So grants can be certain ones have to be paid back and they come with some restrictions. The other one that some grants do is where you have to stay in the home for 5 years. So it limits what you're allowed to do. And then some of them, you cannot refinance them for several years. So the grants that I'm talking about that are available up to $21,000 never have to be paid back ever. They are not second liens on the property. And the other thing is that there's no restrictions. All you have to do is make 6 payments and then I can refinance you. You could, let's say, you thought you were going to be in that area or that house for a long period of time. Do you want a restriction that says, hey, well, you know what, if you move now, you have to pay all that back. So that's what happens with a lot of the grants is that there's a bunch of different kinds, but you want to know which one. So some of them can be stackable, like we're like right now, like the Hopkins, like live where you work, or that can be stackable. But the problem is when you start stacking those, they have restrictions on them. So just if you got any questions about it, you can reach out to me or reach out to the agent, and they'll probably put you in contact with you. I'm happy to have a conversation about any of this because my goal is to help you to get qualified. But just want to go over that. So the money doesn't need to be paid back. It's not a second mortgage. Okay. You get up to 4% of the purchase price. So you say up to $21,000, and then at the beginning of the slides, they were like all these different amounts. It's because you can get up to 4%. It's actually 4% of the 4% of the loan amount, which I can explain to you. But basically, the amount that you get depends on the house that you buy, not where it is or the shape of it. It just depends on the price of it. Okay. Here's what we covered. We covered 3 key factors of buying a home: credit, income, and the down payment. Right? We talked about the magic credit score that makes it easier to own a home, which is typically 640. So if you're not at a 640, you want to just ask yourself, not what is the lowest credit score a bank will finance me, but hey, what's the quickest way that I can get my credit score up to a 640 so that I qualify I just have more possibilities and more options. We talked about how to raise your credit scores on your own without having to spend money on expensive credit repair, and the difference between what you qualify for versus what you can afford, and the difference between a down payment and closing costs. And then we also talked about how to get up to a $21,000 grant. So the question is, who is ready to buy a home this year? Not whether you think you can, but are you ready? Are you excited? Are you like, yes, I want to move. I want to have a place of my own. I want to paint it the way I want to paint it. I want to decorate it the way I want to decorate it. I want to do the things that I want to do. I encourage you to reach out to me and let's figure out a way to help you to get pre-qualified. Regardless of where you are right now, let's see what we can do to help you with that. All right. So if you want, you can text the word buy to my number 443-323-0194, and you'll get, I'll text you my direct schedule, and you can just pick a time that works for you. We can hop on a call and we can help you with getting pre-qualified. So that way we know how much you're pre-approved for. And then you can start working with the amazing agent that invited you here on this call today. And you can start looking at houses and thinking about it that way. So I encourage you to do that. If you get that calendar, I have openings Monday and Tuesday of next week. So, and I know that everyone's situation is different. That's why I do these, for two reasons. One, because everyone's situation is different, and I also respect your privacy. You know, you may not want to ask me a question in front of other people. You know, I'm here either way. I'm here to help you, but I just want to give you that option. So I'll leave you with one last thing before we get to the Q&A. If we've got some questions, wherever you are right now, if your goal is to buy a home and you're truly, sincerely, you want to buy a home, I'll help you get there. I'll help you get there. I'll figure out a way. I'll let you know what it is that you need to do it. All right. So with that said, do we have, well, before we ask any questions, because it's really important to me, like I said, nothing's more important than time. Did you learn anything? Did you find value with what I shared? Let me know, because it's really important to me that I make sure that I help you with what it is. So let me know, did you learn anything? Did you find it, are you inspired now? Are you excited?
Yes. If you're a little shy, just type a yes into the chat or Y into the chat. If you feel inspired, you feel empowered. Oh, I got an absolutely. That's even better. Yeah.
There we go. An absolutely is even better than a yes. There we go. Cool. Awesome.
Yeah, Melissa says yes.
Cool. Thank you so much. Well, that's great. I really appreciate that. All right. So do we have any questions?
Oh, this is a good one. Someone says some fear is already gone. I actually feel like it's a possibility now.
That is fantastic. Who said that?
Bianca.
Bianca, that is fantastic. Because here's the thing. I mean, once you make a decision, you're unstoppable. Once you make a decision, and decisions are made in a moment, right? It might take us a long time to make a decision, but once we make that decision, we can change in an instant, right? We might get to a point where just like, I don't want to keep doing this anymore. I'm tired of, doing that. But once you make a decision, your life can change like that today, right this second, because you just made a decision that's what you've decided to do. So I'm super excited for you. That's fantastic. That's great.
So we do have one question, Carlo.
Yeah.
Is asking, is the FICO the one that you look at because he doesn't know how to get all 3 scores in one report? Yeah,
the FICO score is the one that we look at. And yeah, the only challenge with, well, here's the thing, you can actually request your credit once a year directly from the bureaus once a year, and you can get all 3. So you can do it that way. Credit Karma only offers 2. Credit Karma is TransUnion and Experian, not Equifax. But again, it's a great place to start because it'll give you a barometer of where you think it is. And here's one other thing that I try to do as often as I can is, let's say I'm talking to a client and they tell me where their credit score is. Well, sometimes what I'll try to do is help them with their score before I pull it. Because if there's something that we can do to help you get the credit score up before we do that, then we try to do it. But that's a really, really good question. I typically either pull the credit as a lender or I use their Credit Karma to give them a gauge. But if you want to see all 3, you can request all 3, because I know the other ones typically are separate. Like there's Experian, but that would be the one thing you can do is just Google each one and just request your credit report from each one. And I encourage you, because there's so many clients that say to me, well, that's not accurate. That's still on there? What do you mean I paid that? What are you talking about? That's still there? What do you mean? Right? So you really want to make sure what's on there, so that way you can address it, right? You can figure it out. But great question.
So Melissa's saying that she's heard that lenders take all 3 scores and they take the median score as the credit score that they use. Is this true?
Yeah, so some lenders are doing that now. They've just introduced that. And the other thing that they're doing now too is where they will blend and take the average of the borrower and co-borrower, because typically what's happening, and there's a lot of changes to the lending guidelines, which are good. The only challenge to them is what they're doing is they're offering more and more ways to get qualified, which is fantastic. It's just that while the rates are going up, that's that's the main thing, where the payments are going up, you can afford less, but they are getting creative. So what that basically means is, let's say, you're buying a home with someone else. Typically they go off of the lower of the two FICO score, right? Like that's what's happening right now. But with some programs, you can blend all of them together, but it's not for all programs. But they're starting to introduce that more and more and more. So that is very true, Melissa. So now, since I'm not sharing, I can read the. So you have to have like $5,000 in your bank account to start to think about buying a home. So no, not necessarily. I mean, Eric, it all depends on the house that you want to buy, right? It all depends on how much the house that you want to buy is. But no, typically the more you have, the better it is. It just depends on, if you're looking to buy a $100,000 house versus $200,000 house, the amount of money that you're going to need is going to be different. So, I don't like saying this because my agents are going to get upset with me. So I'm saying this with bated breath, because I know Annette's smiling over there. She's like, don't tell them that. But here's the thing. What ends up happening is clients end up like reading and hearing about, friends that did this and friends that did that and all of that. But what's doable and what's likely are sometimes two very different things. So sometimes when you hear about like, well, my friend got into a house with zero money, like none, right? Well, that is possible, right? I know my agents are like, don't cut them off. Like, don't tell them that. But it is, but is it the best way for you to buy a house? Probably not. So Eric, it really just depends on what, the purchase price and what you're looking to do. So I'm happy to talk to you about that. There are some creative ways to get into homes nowadays.
Yeah. And if
I'll give you one right now. Okay. I'm not saying that this is like everybody can do this, but let's say, for example, you're a veteran. Well, a veteran can go up to 100% financing. Well, if you go, and then how much are the closing costs that are needed? Typically 4%. Well, I give them a 4% grant. Well, guess what? They just got into that home with no money, right? Aside, you need some, right? You got to do home inspections.
If I can interject, Carlo.
Yes, go ahead.
The one thing that we say as realtors, we want you guys to be prepared with your prepaids. So even if you're doing USDA, even if you're doing a VA loan, the prepaids is where you want to have that money. Those prepaids are going to first cover your earnest money deposit. And keep in mind, that's going to reflect to the seller your seriousness in purchasing that home. So, some folks say, oh, I just want to do $1,000. So regardless of the price of the house, we're going to do $1,000. Well, a seller may look very differently when another buyer comes with 1%. So keep in mind that money for your earnest money is a prepaid, and that's money that you need to have up front. And then the other two prepaids that you want to make sure you have money for is for your inspections and also for your appraisal. So those are funds that you want to have set aside right away. Those are funds that are not given to you at closing, not paid at closing. Those are funds that you definitely want to have. So again, as Carlos said, he's absolutely right. Your earnest money deposit may change if your property is 100,000 as opposed to 500,000, but you definitely have to have something in your savings up front in order to cover that.
Yep, absolutely. And then it also comes down to, in addition to that, which is all great points, is that if you're in a competitive market and you've got multiple offers, you want to be able to give your agent some firepower, like I say, so that they can help you, right? So that they can help you win the offer, because there's nothing more frustrating than putting in offer after offer after offer and it doesn't get accepted. Well, that comes down to sometimes the amount of money that you have available, right? Because you might be getting a grant, which is great, but like Annette just said, if you only have a certain amount of money for the earnest money deposit, that could affect whether it gets approved or not. Right now is a great time to go over this because what's coming up, tax season. So when you get those tax returns or you get that tax refund, use that tax refund for paying down bills or having money for an earnest money deposit and those prepaids. It's a great time to have that right now. So Any other questions? I'm going to go move a little bit here so I can plug my computer in, because I don't want to go MIA like I did at the beginning of the call. So I'm going to plug in. But any other questions? All great questions, by the way.
Hey, Carlo. This is Flo. I have a question for you regarding the programs.
Yeah.
I know you mentioned a couple of them, but are there any regarding student loans?
Yes. So there's actually a great program with student loans. So basically, if you're looking to buy a house, a lot of times clients have student loan debt. And even though they're in deferment, sometimes it keeps them from getting qualified. So there's an amazing grant program that if you owe $30,000 or less, there's a grant program that will actually pay off all of your student debt for you, 100% of it, if it's $30,000 or less. Now, does that mean if you owe more than that, you can't do it? No, but it typically means that you would have to make up the difference. So like I had one client that owed 37, and she goes, well, what if I just can come up with the 7? Can I then get the $30,000 forgiven? And the answer is yes. And then in addition to that, you will also get a $5,000 grant to help you cover your closing costs. So it's a really powerful way to get qualified. But in addition to that, I'm glad you asked me that question, because in addition to that, they changed the guidelines last year to help more people qualify that have student loan debt. So even if you have student loan debt, there's different ways that we can help you. One is if you're in an income-based repayment plan and you started making those payments again, we can use that. The other thing is, I've seen some really aggressive, some repayment plans that are great. And then the other thing is, let's say, for example, we'll go over some numbers here. Let's say that you owe $50,000 in student debt, right? And you take 1% of that, which is $500. Well, now you only need to take 0.5%. So the monthly figure that we would calculate is only it's half of what it was a little over a year ago to help you qualify for that. So what you would do is you would just take all of your student debt, add it up, and take 0.5% of what the entire balance is, and that's what's going to be used to factor it in. And you might be thinking, well, I'm in deferment right now. Why are they calculating it? Well, because you're taking on a 30-year mortgage. The lender's assuming at some point you're going to be making payments, right? At some point you're going to want to make payments. If you, okay, go ahead.
Oh, no, I was just going to say, we do also have another question in the chat for you.
If you get approved and the market rates go up, are you locked in for that pre-approved rate, or does it go up with the market? I've read the rates are supposed to go up in March or April. Should I wait to do my application? Great question. That's a great question. So when you get pre-approved with a lender, or you make application, your rate is not locked. It is not locked. So you want to do that sooner than later so that you are ready. You can lock as soon as you typically get a ratified contract and the appraisal is done. The rate lock is all based on time. And it would be, lender isn't going to lock the interest rate if there isn't a property to lock it to for that particular property. So you are completely protected in the sense that if you were to make application now, if the rates went up or they went down, the rates aren't tied to your application. The rates are tied to the contract and when you go under contract. So, and the other thing too is that can some lenders lock your interest rate for 45, 50 days, 60 days? They can, but the longer they lock it for, the higher the rate is. So if you go and you apply, it's not going to lock you in right now. And that's why I encourage everyone who's thinking about buying a house to buy sooner than later, because the rates are trending up. The purchasing power is going to go down, meaning that you'll qualify for less than you do today. And that's why even if you're in a lease, I personally think you have to weigh your options of, hey, does it make sense for me to get out of this lease? Because let's say it costs me $3,000 to get out of this lease. Well, guess what? This house, if I wait, if it's even available in 3 or 4 months or 6 months, whenever the lease is up, this house is going to cost me an extra $200 a month over 30 years. Could cost you an extra $50,000, $60,000 for $3,000. So anybody who
is in a lease right now, I don't care when that lease is up. If you're thinking about buying a home, you should consider anyway breaking that lease. Especially if you find, because here's what you're assuming. If let's say you wait until August, or let's just say your lease is up in August, you're assuming two things. One is that you're going to find the home that you want then, if you find the home that you want then, and where the rates are. So that's why I say whenever I'm working with clients, I say to them, I'm like, take Flo for example. Like, listen, if I were able to get you approved today, and Flo were able to find you the house that you like, would you be open to moving sooner? And most of the time, that it'll say this is aside from helping you get to where you would be pre-approved, like if you're working on credit and down payment, stuff like that. But some people are holding off that are ready to go now because of their lease. And I'm like, your landlord or your leasing company, whoever it is, could be costing you a lot of money. Could be costing you 50 grand, not only in interest, but in purchasing power. So I encourage anyone, if you have any friends, family, coworkers that are interested in moving this year, get them in touch with the agent that you're in contact with. Let them have a conversation, and then I'm happy to talk to them. Flo and Annette and Tonette, they will tell you, like, I'm happy to talk to everybody, because here's something I'll share with you real quick. Because one of my other friends who's a lender, he's like, you mean to tell me that you just tell your agents to just have people call you? Yeah, because everyone's situation is different. Everyone's situation is different. Like, so if I just assumed what somebody can qualify for, what somebody can't qualify for, and I'm like, only send me people that meet this criteria, well, that wouldn't be fair to them, because I don't know what their situation is. I didn't know that the one kid at 21 years old, that his mom would add him as an authorized user. So if the agent that referred me that, I said to her, hey, look, don't send me anybody who doesn't have a credit score like that. I don't have time for that right now, but like, no, send them to me and then let me figure out a way to make it work. You know what I mean? And then help. And again, it goes back to your why. He wants a house. This kid, I say kid because I'm double his age. I don't want to date myself, but I say kid at 21, but you're like, wait a minute, that's how old I am. I'm not a kid. No, I mean that respectfully. Trust me, when you get older and you call somebody 21 years old as a kid, it's actually I'm giving them respect, and I'm jealous. Okay. So we'll just say that. All right. But anyway.
You know what, Kylo, I'm glad you said that, because when we do talk to, we talk to our clients before we send them over to you, we ask the basic questions of, what you're looking for, where, how much you make, where, your credit score. But a lot of clients or prospects are not, some of them aren't comfortable with giving us everything, giving us all of their information, and they're more comfortable talking to a lender. And to be honest with you, as realtors, we don't need to know the ins and outs of the information. We just need to know that you are qualified, and we need to know what we need to, the list price of the house that you're pre-approved for. So that way we can know what type of houses to send you at what value, and how much you can afford, which actually brings me to my question of, what's the difference between pre-qualification and pre-approval? Because you have some clients that say, oh, I'm pre-qualified. I went online and I, put in my information and I got pre-qualified for this amount.
Great question. So the difference, quite simply, is that when you're pre-qualified, it's the lender hasn't pulled your credit, has not reviewed any of your income documents, has not looked at anything. They're just basically pre-qualifying you based off of information you gave them over the phone or over the internet. And the problem with that, and one of the main reasons why people do that, is because they're like, well, I don't want somebody to look at my credit. I don't want anybody to look at my credit. I heard my credit score is going to drop or whatever. But again, if you're serious about buying your home, you want to be pre-qualified, because a pre-qualification means that the lender looked at your credit. They looked at your income. They looked at the documents that are going to matter. Because what happens is, when one of these great agents that's here goes to put an offer in, the very, very first thing that's going to happen is the seller of that house, or the listing agent who's representing the seller, they're going to call Carlo at 9 o'clock on a Friday. And they're going to be like, you know what? I just got an offer from Annette, and I want to know if you pulled credit. on that client. And if you looked at their income, did you? And I can tell you this, well, number one, I wouldn't give a pre-approval without doing that. But if I said no, they would be like, next, and they would go to the next client. So it's really, really important that you put aside your fear about your score going down. If you're serious about buying a home, you want someone to give you accurate figures. And here's the analogy that I give. It would be like calling up your mechanic and being like, listen, my car's making noises. I don't know what's going on over here. I don't know. It's like, you know, my steering, listen, how much do you think it's going to cost me to get this fixed? Would you trust any quote that mechanic's going to give you? Number one, he should never give you a quote like that. He'd be like, listen, you got to bring the car in. I got to see the car. I got to understand what's going on with it. So that's the same thing. Like, you can sit there and like get pre-qualified 1,000 different times, but it's really doing you a disservice because the numbers are worthless. They're worthless. Because at the end of the day, if you want to buy a home, what the seller is going to say is, hey, did somebody actually pull your credit? And did they review your income information and your documents? So the difference between pre-qual and pre-approval, pre-qualification it's just, you know, you had a conversation, you put in some information, you're pre-qualified. You're pre-qualified for up to this amount. I can pre-qualify anybody. Now, here's what I will do. And a lot of these amazing agents on this call know this. What I will do is if we have a conversation and you say to me, you know, hey, listen, I know my credit score is 600. I know it's not a 640. Well, what I probably will do, unlike most lenders, is I'm not going to waste an inquiry and just put a hit on your report. What I'll do is say, do you have Credit Karma account? And I'll use that as a tool to help you. And then I'll go into your Credit Karma account, I'll record a quick video, and then send you suggestions on what you should do before I pull credit. So that's something that I use as a tool to help my clients. So that way we can try to help you before I do that. Or you might be like, hey, there's something on there's 3 or 4 things on my report or whatever. But if you think that your credit score is a 640 or something like that, I should look at it because chances are it might be higher or lower and I can still do that. But that's the main difference. Anyone can quote you an interest rate, but I will say this, the right rate on the wrong loan could cost you the home you want. Okay, the right rate on the wrong loan can cost you the home that you want. You know, one of my agents referred me a client a couple of days ago, and we were talking. We were on the phone, and she said to me, she goes, "What's the rate? What's the rate?" Right? Like it would be like saying to your mechanic, "What's wrong with my car? What's wrong with my car?" That's it. She's like, "Rate." I said, "Cool." I said, "Listen," I go, "I'm just curious about something. Are you making your decision solely based off of interest rate?" And she goes, "Yep. That's all I care about. That's all I care about. I just want the lowest rate." I said, "Well, you know who's going to care a little bit more about who you use? The seller of the house. Because if you use some internet lender that just gave you the lowest rate that you can possibly find, but they can't get that person on the phone and they read their reviews and they see that lender's terrible, do you think they're going to go with you who shopped for the lowest rate? Are they going to accept your offer?" And she goes, "That's a very good point." I'm like, "Yeah." Or are they going to go with someone who they can get on the phone, who's going to communicate, who's going to make sure that they feel comfortable? I had a listing agent call me last night at 9 o'clock at night. 9 o'clock at night. And I answered my phone because I hadn't started drinking yet. That's a joke. I'm just kidding. I had started drinking. But anyway, my point is 9 o'clock at night. That internet lender that's scraped, like, you know, and sometimes when they quote rates like that, it's because they can offer rates like that because they have no support staff. Like they don't no, if you have a question between 9 o'clock in the morning and 1 o'clock in the afternoon, we'll answer your question. If not, forget about it. So that matters. So that does matter. So just keep that in mind. But anyway, you're all smiling because you know I could talk about, like, you guys could go have lunch and come back and I'll still be answering the same question. Right, Flo? You'll be like, yeah, like he's gonna just keep answering the same thing. But anyway, yeah, I'm kind of so I've always looking big, but I'm being told I don't make enough to be looking at $5,000. Yeah, I mean it's possible, Eric. The thing is, you know, at the end of the day, what I try to do is I try to think about what it is that I want and then figure out, you know, how I need to get there. So when you're saying like you're being told, no one no one dictates your future but you, right? Like if someone's telling you, like, I'm being told that my income isn't enough, and I'm being told this and I'm being told that, you have the power to change that, right? It's not like somebody's telling you something and it's like, well, who are you to tell me that I don't make enough? There's opportunity everywhere. You know, think about what it is that you want. And if you're like, hey, I would love to have a house of my own, 200,000 or whatever it is, what would that monthly payment be? And then what would I need to do in order to accomplish that? You know, so that's just a mindset shift that I really encourage you to maybe take on, you know, because no one should, you know, they might, it would be like if somebody came to you and they said something and it's like, well, you know, people's words don't mean anything. We give them the meaning. We give them the power of whether they're going to have any effect on us at all, right? Someone might say like, well, you can't do that. You can't, you know, you're not going to be able to do this. You're not going to be able to do that. We can allow that to affect how we go about our day, or we can just be like, yeah, that's great, but wait until you see what I do. Wait until you see what I'm going to do. Wait till you see, you know, so that's something to just think about. Right now, the real question is, how much would that mortgage be between 5,000 versus 250? Yeah, you mean 500,000 versus 250? Like half, like 500,000 versus 250,000? Or you mean the payment? Like what would the payment be, 500 versus 250? So yeah, typically just take take $7 per thousand. So you could just take 7 times 500, and that'll give you an idea what the monthly payment would be. But great questions, all great questions, all great questions. Any other questions? You're welcome. You're welcome. All right. Any other questions? You know what I get so excited about is when I get really excited, and I know things come up, right? Because like, you know, someone might come on and like, you know, they only planned on maybe being on the call for 45 minutes, or, you know, something might come up where they need to go. But I get so excited when we have the same amount of people, or around the same amount of people as what we started with at the end of the call, because I know that they're serious about wanting to do something and really, really like do it. So I commend all of you for that, for being on the call. And I'm really, I'm looking forward to helping you. So if you need anything, please reach out to me or one of the amazing agents that invited you. They're all great, and they're with a great company, and they all really care about helping you.
Yes. So, and of course, I want to thank my counterparts, all the realtors that have attended the call, and both the ones that assisted me in hosting a call. Everyone who joined us, thank you again. Please continue to watch both Flo, Tonette, and I's Facebook page. We will be partnering with Carlo to do other workshops. So you can certainly join us again. Or if you know someone else looking for a home, invite them when you see that post as well. It's about 11:21. So we were going to give you the rest of your Saturday morning back. And again, thank you so much for joining us. Have a wonderful day.
Thanks, everyone. And reach out if you have any questions.